Hey, Bulls and Bears, thank you for joining me. As I'm recording this, it is Monday, November 29th, 2021. Back with another dose of economic reality. We've got a lot of very important news and topics to cover today regarding the economy, the financial situation, and where things are headed. Please make sure you are subscribed because we've got some important things to talk about. We are headed into phase two of this economic crisis situation with the latest emergence or the next phase of the health crisis. And we're seeing new travel restrictions. And guess what? That's going to be more backups, more delays, more labor shortages, more fear, and lots of other problems that go along with this type of thing. So we warned you, most of you listening right now, if you've been on this channel for just a few months, especially if you've been on it for a few years, you knew this was coming. Things are going to continue to get worse. There's always going to be the next thing to be scared of, and that's the world that we live in right now. And it's pretty, pretty sad. But we have to face reality. I wish I had better news for you. But take a look at some news that I found today. This one's out of Newser. Food prices may spike again thanks to a new shortage. I'm not sure why they use the word again because food has prices have spiked and they never really came back down. So they're basically going to spike further and continue to go higher. But again, this is no surprise to you. We're going to see more stories like this. In this case, it's fertilizer. You're going to see the shortages continue to stack up and prices continue to rise. So keep preparing for what's coming. Now, we talk a lot here about how companies have left the United States and how manufacturing companies, especially, like to outsource. And one of the biggest reasons is we have such a high cost of living here that there's pressure put on these companies that choose to remain in the United States to pay a higher wage. So, what do a lot of them do instead? Well, they send the jobs overseas. We see Missouri now wants to outsource the unemployment call center. So, imagine you lose your job and you call unemployment to get some help, and the person that answers the phone is not even in the United States. So, you might be actually getting help from someone that took your job in this case. Right? So even the unemployment call center is outsourcing and they're subcontracting to a company that's pretty big on outsourcing. And the company that that unemployment center uses is called Protiviti. And even on their website, they highlight right up front, you don't have to search too hard, managing outsourcing and offshoring risk. And again, it's no surprise because nothing's being done to change what we've been seeing over decades now, the high cost of living. And you can pay people in other countries to manufacture, to take phone calls in this case, at a fraction of the cost. So it's just business 101. That's what businesses are going to continue to do. Sure, we're seeing some manufacturing coming back. In some cases, it is cheaper to manufacture here in the United States when you look at the cost of shipping automobiles across cargo ships. Companies are still manufacturing vehicles here in the United States. But when it comes to things like customer service, expect to pick up the phone and have someone else that's offshore helping you in most cases. And even when you're calling to get help about unemployment. So it's pretty pitiful, pretty sad what's happening. But it's not just the United States. This is happening globally. Spanish inflation jumps to 3-decade high as food prices rise. Things are pretty similar wherever you go. And that is to be expected when you have a global health crisis stacked on top of endless money printing for every country on the globe. A recent article here, News Channel 20, record low unemployment rates do not help local businesses still looking to hire. So a lot of people are still choosing to check out of the labor force. We hear story after story, day after day, of companies that just cannot find enough workers, but yet we're supposed to believe that the unemployment right now is 4.6%. Right, 4.6% unemployment rate. Who actually believes the numbers they're putting out with 100 plus million out of the labor force? We're supposed to believe that this is the unemployment number. I don't know who still believes this. Maybe Middle schoolers, probably not even middle schoolers, probably just the kindergarten. Maybe there's some people in the first grade class that still believe this. But we look at shadow stats, and we showed that a few episodes ago. It's still about 25% when you actually count all the people that are not working. And that actually doesn't include the elderly and people that are too young to work, just people of working age. Let's talk about the housing market. Pending home sales rebounded sharply in October despite rising mortgage rates. What they don't tell you is that the numbers are still down year over year. Yes, they rebounded from the previous month, a month over month increase, but compared to October 2020, the sales numbers are still down, and that's even with very, very heavy-handed buying from institutional and corporate investors. Over 1 in 6 homes in the third quarter was sold to a hedge fund, to an institution, and they're going to turn around and rent those homes right back out to this probably the same people that couldn't afford the home or got outbid trying to buy the home. So again, pretty sad. And we're likely going to continue to see the home ownership rate decline as we did on the last update of the home ownership rate. And the people that are buying homes, well, yeah, some of them pay cash. Sadly, most cash buyers are institutions, and the people that are getting mortgages are taking on just bigger loans and taking on more debt. Take a look at this. This is about the third quarter. Household debt climbed to over $15 trillion, driven by new extensions of credit. Right, pluses in just about every category: mortgage debt, student debt, auto loan debt, credit card debt, and other types of debt. You see, without endless debt, this illusion of an economy comes to a screeching halt. That's why they had to lower the bank reserves requirement to 0. That's why we have to have rock bottom interest rates, because it's all propped up on debt. Simply put, when the debt stops, the spending stops. When the spending stops, the economy stops. And that's because we're about a 70% consumer economy. All right, let's talk about this article here. This is out of Go Banking Rates. The ultra rich are saving their money instead of spending it. Now the middle class is buried in debt. So they're trying to blame, this article is trying to make the point or convince us that because the rich aren't spending is why the middle class is buried in debt. Their theory is all the rich people go out and spend their money, and that creates jobs, and that gives the middle class jobs to do, and then the company that they work for will pay them a good salary because the rich are spending. It's really not that simple. The real reasons are the endless money printing, the endless bank liquidity. And now add on top of all that, we have all these restrictions, supply chain issues, shortages, backups, you name it. It's a one big perfect storm. So continue to brace yourself, folks. Things are looking like they're just going to continue in the same direction with rising prices, more job losses, stagnant wages. And when you look at the wage increases, you're basically, for the most part, not keeping up with the cost of living. So essentially, we have falling wages. All right, we're going to wrap this one up right here. Thanks, everybody, for being here. Continue stacking. Stay well. Stay safe. Stay prepared. Bye for now. Peace.